A very good afternoon, everyone. My name is Vinoda Chantiran. My metric number is 267700. Our topic is COVID-19, the global shutdown. Firstly, I'd like to explain what is COVID-19. COVID-19 is an illness caused by a novel coronavirus. Firstly, the virus was found in Wuhan, China. This virus can spread from a person to a person. This virus infected from a respiratory droplets when an infected person coughs, sneezes, or talks. World Health Organization declared COVID-19 as a global pandemic. Due to this, Malaysian government implement movement control order and close all the interstate borders to prevent from the spread of COVID-19. The lockdown was finally turned into an economic shutdown. Okay. Now I like to discuss what are the issues faced by COVID-19. Firstly, the supply shock. This pandemic makes an immediate fear of disease impact on people's life. The makers enforce the lockdown to enable the social distancing in order to avoid the spread of COVID-19 disease. Then, the food supply chains were disrupted. The demand for food is rise as the global economy assumed the absence of the supplies, so there is no opposition for the food supply. Okay. Secondly, demand shock. The negative market shocks exist due to the lower demand for a product or services. However, during this pandemic, the demand for face masks and hand sanitizer were rise. Due to the lockdowns, most of the essential goods went out of stock due to the high demands. The next is the labor demand decreases as the most of the firms were closed due to the bankruptcy and workers loses their jobs. Then the oil price dropped as the worldwide collapse in demand due to the lockdown, slowing in travel and leads to a slumping in the oil demand. And finally, the demand for the medical supplies and hospital beds increases as the number of people infected by coronavirus keep increasing. That's all. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Aina Farisha binti Makasim Ahmad. My matrix number is 264884. Today I'm going to present regarding of the policy implemented, which is fiscal policy in the global shutdown during the COVID-19. Okay, most affected countries by COVID-19 are using fiscal policy to stimulate their economic performance due to shutdown when the pandemic spread around the world. The fiscal policy that government inject to the economy by focusing on first, spending side measures. Government spends wage subsidies and transfer to workers and firms, funded the paid sick and family leave to those who are infected, self-isolate or have to stay home during school closing. This policy has been implemented in France, Japan, Korea, and so on, while other countries such as Germany, United Kingdom, United States, and Japan using another alternative by giving cash transfer to low-income households and temporary enhancement or extension of unemployment benefits. The US approved larger stimulus packages which provide $2 trillion to shield American families and businesses from financial consequences. Germany was given subsidies to firms and maintained employment at reduced hours by covering employers' social security contribution for the missed hours. In Singapore, Korea, and the US, temporary direct subsidies are given to affected businesses, including self-employed, to avoid sector dislocation. Next is revenue side measures. Government reduced the financial burden by expanding loss carryback rules to support affected firm cash flow or provide tax relief to affected people and firms by COVID-19. Other countries use postponing social security system as an option and reduce the tax advance payment based on past outcomes. As example, China easing the tax burden for firms in most risk regions and sectors, including tourism, transportation, and hospitality service. The UK, applying property tax relief for 1 year, pointed to small businesses in heavily hit sector. The last one is government-supported liquidity measures. Government providing cash flows in forms of loan, guarantees, and other liquidity support. Example, Korea, Thailand, and the UK extend temporary loans to firms and households in the affected sectors. Liquidity support, including government provision of loans, equity injection, and guarantee on businesses' loans, sometimes extended through state-owned financial institution or corporation. The liquidity support is now estimated to total $4.5 trillion globally and is often larger in size than in the revenue and spending measures. The US extended dates to pay 2019 tax and freeing up almost $300 billion of short-term liquidity. That's all from me. I will pass this presentation to the next presenter. Thank you.
My name is Dewi Emilia Fazira binti Zaidi. My metric number is 26131. We would like to recommend monetary policy to counter the current financial and economic slowdown. Firstly, near zero interest rate. Central bank should lower the federal funds rate and relax the regulatory requirements temporarily. The US Fed has cut their federal funds rate by 1.5 percentage points and bring it down to a range of 0 to 0.25%. The country also done this, as example, Barbados that reduced the discount rate to 2 from 7%. This move aimed to lower the cost of borrowing mortgage, auto home, and other loans. Next, supporting financial market functioning by security purchases, and these were done by US. They are fed by at least $500 billion in treasury securities, and also Canada bought up to 150 billion of insured mortgage. Securities purchasing support smooth market functioning and effective transmission of monetary policy to broader financial conditions. Next, support companies and businesses by direct lending to major corporations, employers. The US Fed introduced PMCCF, where borrowers may defer interest and principal payments for at least the first 6 months so that they have cash to pay employees and suppliers. Bosnia and Herzegovina Bank Agency also announced 6 months loan repayment who have problems in loan repayments due to COVID-19. Lastly, increase national and international swap lines by making country currency available to other central banks. The Fed gets foreign currency in exchange and charge interest on the swap. As for US Fed, they cut the rate on those swaps with central bank in Canada, England, the Eurozone, Japan and Switzerland, and extended the maturity of those swaps. As to conclude for the monetary policy, central bank needs to take strong steps to support liquidity in both domestic and the external market.
Assalamualaikum and hi everyone. My name is Nur Anishuada binti Samsudin with metric number 263160. I'm going to continue the presentation with the implication and cons of fiscal policy. So, in this case of global shutdown due to COVID-19, expansionary fiscal policy is being applied as the world economy is actually facing a phase of recession due to the global pandemic. So, expansionary fiscal policy is a type of policy where government will lower the tax rate to help increasing the world aggregate demand and to accelerate and boost the economic growth. So, first and foremost, fiscal policy that is implemented by the government actually provide the protection and ensure the livelihood of the people. So this being said, because when the government agree to push back the date of tax payment, This actually relieve the burden of the people. Because unfortunately, during this global pandemic, many people are losing their job, and many firms and companies had to shut down as they are not able to survive during this pandemic. So this in turn lead to many people losing their job and being unemployed. So in Malaysia, for example, the government launched a campaign of Targeted Relief and Recovery Facility (TRRF) to actually help the affected SMEs in the services sector. Beside that, banks in Malaysia also offer a moratorium on loan repayment until 30 September 2020. And this actually helped the affected borrowers to restructure and reschedule their loans, as there were people losing their jobs and cannot repay their loans. So apart from that, implying to the expansionary fiscal policy, the government spending rate also been increased by the government, as the government allocated more incentive and spending to actually helps the people to cope and survive during this pandemic. Not only that, this idea of cash injection is also actually to boost and enhance the people's spending, so that they will not be afraid to spend more during this pandemic. For example, Bantuan Prihatin Nasional (BPN) and Bantuan Prihatin Rakyat is provided by the government as a cash injection to boost people's spending during this pandemic. However, expansionary fiscal policy also brings disadvantages, where it also can lead to inflation. This is because when people have money, there will be more demand for a product. So when there is too much money chasing for a small quantity of product, and in other words, there will be excess demand and shortage of product. Therefore, the producer will intentionally raise the price of the product, and the cost push theory therefore will be more focused on the producer side. So thank you. I'm going to pass this presentation to the next presenter.
Hello sir, my name is Akeshwari Arimugal. My matching number is 26299. I will present regarding the implications and also the consequences of monetary policy. I will talk about the positive impacts of this policy, which is re-stimulate the household and also the business sector consumption. During economic recovery phase by November 2020, overnight policy rate, which is 1.75%, lead to fall in the interest rate in Malaysia financial institutions such as bank. This result in increasing in the household and also business sector consumption due to the money power. In the moment, household and business sector applied for personal or financial loan from financial institution in long-term period due to the interest rate was low as a way to reduce their financial burden during the COVID-19 pandemic. However, based on a statement that been stated by Bank Negara Malaysia, said fewer Malaysians are applied for the loan. Second, I will talk about the negative impact of the monetary policy, whereby most likely foreign investors are change their investments to other country. This is because low interest rate of overnight policy rate (OPR) result foreign investors might move to other country and like to change their investment uh, to other country to gain higher interest rate. But based on the New Straits Times stated that Malaysia has mostly lost domestic investors, which is about 45.5%. However, they would like to try to recover the issue within year 2021 to 2022 with other incentives that were introduced by government. However, this may bring an loss and also difficulties to gain the belief from the foreign investors towards our country investment. Last but not least is about the depositors and investors whom are affected with the low returns of dividend. By early 2020, the dividend rate for fixed deposit dropped dramatically due to the pandemic. However, stated that the current inflation rate, which is still negative, did not distract much the return rate because the inflation rate in Malaysia was recorded as negative 1.4%, which gives the positive returns towards for the depositors. However, the depositors has stated that although they received the dividends in a positive returns, but the amount are small and not as expected by them. That's all from me. Thank you.